Good afternoon, or good morning. On behalf of the International Capital Market Association, I welcome you to this event, Sustainable Bonds for Gender Equality, the Australian Perspective. For those of you not familiar with ICMA, we are a trade association that has represented the global debt capital market for more than 50 years. We have a diverse membership of more than 600 institutions across more than 60 jurisdictions. Our membership includes private and public sector issuers, banks and securities dealers, asset managers, insurance companies, law firms, exchanges, fintechs, and central banks. Our core focus at ICMA is on market practice and regulatory policy issues across primary and secondary bond markets and repo. Some of you may be aware, for example, of the ICMA Primary Market Handbook and the Global Master Repurchase Agreement, which are both managed by ICMA. But this event happens to represent what I would call a fortunate intersection of three aspects of ICMA's work closest to my own heart. From a markets point of view, sustainable finance. From a policy point of view, diversity and inclusion. And on a geographical dimension, Australia. So let me say a few words about ICMA's work in each of these. In sustainable finance, you will all be aware of the green and social bond principles, the sustainability bond principles, and the sustainability linked bond principles. We take great pride in the fact that last year, 98% of sustainable bonds issued worldwide, and actually 100% from Australia, were aligned with the ICMA principles. But our work with the principles community is much wider than that, including, just to name a few examples, guidance on transition finance, suggested principles for national taxonomies, guidance on social impact metrics, commentary and case studies on financing for the pandemic, and guidelines for external reviews. In Asia Pacific, we're also very active in regulatory policy, responding to a number of consultations on proposed national and regional taxonomies, sustainability disclosure requirements, and official sector product standards. Most recently, of course, ICMA, in partnership with IFC and UN Women, published a practitioner's guide to using sustainable debt for gender equality. We call this Bonds to Bridge the Gender Gap. And in just a few minutes, you'll hear much more about this guide and specific ways in which sustainable bonds can support gender equality through targeted, ambitious, and measured investment. Excuse me. But of course, gender equality is only one aspect of diversity and inclusion. On a practical level, we at ICMA believe that diversity and inclusion in the workplace is actually good management practice and makes sound business sense. We fully support diversity efforts, both at the broader industry level and also with respect to our own association. Now, it's one thing to express support and quite another to take concrete steps to implement your values. We recognize that there still is much more that we can do to promote active inclusivity. ICMA has been running a successful women's network, the IWN, ICMA Women's Network, and a Future Leaders Committee, ICMA Future Leaders, or IFL, both for almost 7 years now. Both of these networks, importantly, are open to all employees of our member firms, regardless of gender or age. And we hope very much to plan in-person events and workshops in the Asia Pacific region very soon. Diversity and inclusion transcends both gender and youth issues. Therefore, earlier this year at ICMA, we published a diversity and inclusion framework for our own internal operations. This outlines specific commitments with respect to the work environment, training, development, and progression opportunities, and also hiring and recruitment. Our aim is to create a workplace which is fair, safe, accessible, and inclusive, where everyone at every level feels that they belong, that they have a voice, and that they can thrive and succeed. Now, diversity takes many forms. Of course, there's country diversity, and I'm delighted that we now have this event and panel discussion focused on Australia. Australian financial institutions have been an integral part of the global Eurobond markets and actually active in ICMA for decades, even since the 80s, well before the establishment of our Asia Pacific regional office back in 2013. We now have 10 Australian members, including all the major banks, but more importantly, to me at least, our Australian stakeholders have been at the forefront of our global conversations at ICMA, not only with respect to sustainable finance, but also in repo market standards, benchmark reform, and digital bonds. It is important for me and part of my job to ensure that the specific characteristics of Australian markets and Australian society, as well as the innovative solutions being developed in Australia, are communicated to a worldwide audience and taken into account seriously as we continue to provide guidance to the global market from ICMA. So last but not least, I would like to thank our partners in this event, King & Wood Mallesons for their initial inspiration and guidance in planning, Kanganews for their media promotion and always helpful advice, and of course, IFC and UN Women for their contributions and expertise, not to mention their overall leadership in gender-themed investing through the capital markets. I'll conclude here and look forward to hearing the perspectives of our distinguished presenters, speakers, and panelists. I now hand the floor to my colleague, Valérie Guillaumin. Valérie, the floor is yours.
Thank you very much, Mushtaq, and good afternoon, all. I'm Valérie Guillaumin, working at ICMA Paris office, so apologize for my bad accent. I'm part of the sustainable finance team at ICMA, and as you may know, ICMA currently provides a secretariat for the principals following its appointment by the Executive Committee of the Principals in 2014. So, as mentioned by Mushtaq, ICMA is also very proud to be a co-author together with IFC and UN Women of the guide Bonds to Bridge the Gender Gap. So what is ICMA's role in the green, social and sustainability bond market development? Where do the gender bond guidelines fit with the principles architecture? I will try to summarize this briefly. Let's start with a brief reminder of the principles. As highlighted in the guide, debt instruments such as social, sustainability, and sustainability-linked bonds provide financing opportunities for market participants that want to advance gender equality. They are really fit-for-purpose instruments. The social bond principles and the sustainability-linked bond principles are both voluntary process guidelines that recommend transparency and disclosure. The first version of the social bond principles was released in 2017, whereby the sustainability-linked bond principles were released in June 2020. So you can see the sustainability-linked bond market is a very nascent market. Social and sustainability bonds are categorized under the use of proceeds approach. This means that issuer must apply all the proceeds from the bond to implement the type of projects that were identified prior to the bond's issuance. The social bond principles specifically identify women as an eligible target population for social bond projects, and in the list of common project categories are including socio-economic advancement and empowerment. When incorporated gender equality objectives into a use of proceed bond, issuer can choose among three options. First option, to make gender equality the sole objective of a social bond, which is often referred to as gender bond. But please note that gender bond is not a separate label. Gender bond is a brand, but the bond is aligned with the social bond principle. The second option is to include gender alongside other social objectives in a broader social bond. And the third option is to include gender alongside green objectives in a sustainability bond, which is issued to finance a combination of green and social projects. Given that the social bond, sustainability bond, and sustainability linked bond principles are broadly the most reference framework for sustainable finance, as indicated by Mushtaq, logically, the guide we have issued with IFC and UN Women aims to complement those principles for issuers who want to raise financing to address gender-based issues. In addition to the social bond principles, the Executive Committee has published additional guidance, including notably the Sdg Mapping. The Sdg Mapping includes a table that illustrates how the SDGs may be considered by both the private and the public sector as they identify eligible operations for green, social, and sustainability bond use of proceeds. This table is a result of a high-level review of each of the 17 goals in order to identify those that may be relevant to either the green or social project categories. The SDG mapping will be updated later this year and will include a new appendix related to gender length investing. This appendix will aim at giving example of how social bond issuer can consider mitigating gender inequality of the use of proceeds, as well as example of measure and tracking of gender gaps impact in their reporting. For example, regarding the use of proceed gender lens, the proceeds can be utilized to address social issues that women face and that promote gender equality. Some example of gender consideration could include, first, increasing women's representation in business ownership or senior leadership position, or creating a substantial improvement of gender diverse and equitable workforce or gender inclusive value chain for a given sector or a given country. Project can also design or offer products or services that help address, reduce, counter or neutralize gender inequality and benefit clients or consumer who face discrimination based on their gender. Regarding impact reporting on gender lens, if the target population includes women, reporting indicator could be the level of pay equity between men and women at each level organization, the share of men, women at each level organization in percentage terms, the number of women using technology products such as mobile phone or other technology that enable communication and information sharing, or at least increased ownership of assets of women such as land and property. Regarding the sustainability-linked bonds, such products are performance-based bond instruments designed to encourage the issuer to achieve sustainable outcomes. Sustainability-linked bonds are any type of bond instrument for which the financial and/or the structural characteristic can vary depending on whether the issuer achieves predefined sustainability objectives. The proceeds of the sustainability-linked bonds are intended to be used for general purposes. Hence, the use of proceeds is not a determinant in its category. An SLB issuer can use quantifiable key performance indicators to assess and benchmark impact and assess improvement in its sustainability performance targets by a given date. The guides provide multiple examples of projects and KPIs. Some sample of KPIs, the number of percentage of women across all levels of leadership in the enterprise or in specific leadership roles with low representation, for example, at board or management level. The retention rate for women leaders, the size of the gender pay gap among leadership, and the percentage of women in leadership, sponsorship, and mentoring programs. Example of sustainability performance targets: increase gender diversity by a specific percentage or achieve gender parity across leadership roles, improve the retention of women in leadership roles by a specified percentage and a date, close the gender pay gap among leadership, including bonuses with a specific date, increase gender diversity by a specific percentage, or achieve gender parity in leadership, sponsorship, mentorship programs by a specific date. If an issuer of a sustainability-linked bond does not achieve those targets, the financial and/or structural characteristic of the bond will be negatively impacted. As a matter of conclusion, I hope that gender lens will be systematically included in social and sustainability bonds. Thank you very much for your attention. We will now listen to IFC and UN Women presentation, the two co-authors of the guide together with ICMA. Thank you.
Hello, everyone. My name is Kathy Mignano, and I'm with the Gender and Economic Inclusion Group at IFC. It's truly my pleasure to be presenting the Bonds to Bridge the Gender Gap Guide today, together with Valerie and Robin. IFC is the largest global development institution focused on the private sector in emerging markets. Our work supports the World Bank Group's goals of ending poverty and boosting shared prosperity. To advance gender equality, we provide investment, advice, and research to help private sector companies close the gender gaps in emerging markets. Our Banking on Women portfolio, for example, is now over $3 billion and has worked with financial institutions in over 63 countries to finance women-led SMEs. We've also committed over $170 million to address gender gaps in private equity. IFC first launched our social bond program in 2017, combining our inclusive business and Banking on Women bond programs. And since then, we've issued 72 social bonds in 13 currencies, totaling $4.8 billion. Gender remains a key component of the use of proceeds for our program. Gender-focused bonds actually remain relatively rare, even as the market for sustainable debt, including green and social bonds, grows at a record pace. Only a small fraction of the sustainable debt issued has been earmarked to advance gender equality, and predominantly by financial institutions on lending to women entrepreneurs. The ultimate objective of the guide is to bring clarity to the market on how to use sustainable debt products for gender and to drive wider uptake, especially within the real sector. We believe the guide will be helpful for the entire ecosystem, including arrangers, borrowers, underwriters, external reviewers, as well as new and existing bond issuers as they take steps towards pursuing gender equality. The guide lays out a framework on how sustainable debt instruments can be used to advance gender equality in both the public and in the private sector. For private sector issuers, it starts with first identifying the different ways that gender inequalities might be manifesting themselves across the issuer's own operations. So whether this is at the leadership level, among the employee base, across the supply chain, or in terms of the products and services that they offer. The guide provides examples of gender-related activities that issuers can consider to address these inequalities, depending on their own specific priorities, as well as their sector and country context. So for example, issuers might use bond proceeds, whether it's a gender, social, or sustainability bond, to address a gender gap in the types of businesses that they source from. They could do this, for example, by helping women-owned suppliers meet the company's procurement requirements. The guide also provides examples of gender-related targets for issuers that are pursuing a sustainability-linked approach. Sustainability-linked bonds are a great way for issuers to integrate gender into their funding programs and demonstrate their high-level commitment to the market without ring-fencing their use of proceeds. And we're starting to see more sustainability-linked bond issuances, which do integrate gender targets alongside climate targets. Typically, these targets are in terms of women in management positions or sourcing from diverse suppliers. Lastly, the guide includes a number of resources that issuers can turn to for established gender indicators for impact reporting. There's no need to reinvent the wheel here, but rather build on the existing indicator work that has already been done. For private sector issuers, gender, social, sustainability, and sustainability-linked bonds all offer an opportunity to demonstrate their leadership in advancing gender equality. At the same time, issuers can diversify their investor base, leverage new sources of financing, and potentially be included in sustainability indices. The demand for gender-related sustainable bonds remains high among investors, and it's higher than the current supply. The bottom line is that gender equality is a boon for business. Diversity can improve talent pipelines, strengthen market development, and unlock opportunities for increased profit, growth, and innovation. Intuitively, we know that we achieve faster and stronger economic growth with all of us, not just half of us. And the data bears this out. When private equity companies have gender-balanced teams, their returns are up to 20% higher. Research is also demonstrating how more women in business can broaden the talent pool, increase productivity, and lead to improved disclosure on environmental and social issues. But gender equality has been slipping backwards because of the pandemic, and pre-existing gaps have been amplified. The reality is that none of us or our children will see gender parity in our lifetimes if we continue with business as usual. Well, the private sector can help stop this inequality slide while at the same time benefiting from the growth opportunity. We hope that the guide encourages stakeholders across capital markets to go beyond business as usual in addressing gender inequalities and unlock the funding opportunities that sustainable instruments present. Thanks, everyone.
Hi, everyone. It's a pleasure to join you today to discuss how sustainable debt can be used to further gender equality. During this presentation, we'll have a look at the role of the debt capital markets, the classification and types of gender bonds, and how the recently launched IFC, ICMA, and UN Women gender bond guidelines can support both issuers and investors. But first, why gender equality? Well, climate change, conflict, and the COVID pandemic are arguably the greatest challenges of our time. And we see that through all of this, women are disproportionately affected. When we take climate change, women are 14 times more likely to die during a natural disaster than men, and 80% of people displaced from climate change are women. Similarly, the COVID pandemic has disproportionately impacted women, as women are often domestic workers, caregivers, and are those overrepresented in hard-hit sectors such as food, service, and retail. Lockdown and shutdown policies, including closure of schools and nurseries, have increased unpaid care and domestic work and heightened the risk of gender-based violence, with conservative estimates showing that violence against women has increased upward of 30% during the pandemic. Secondly, gender equality is not only a fundamental human right, it is also an economic imperative. To give you 3 statistics to illustrate this point. Firstly, the IMF projects that losses due to women's economic disempowerment range from 10% of GDP in advanced economies to more than 30% in South Asia, the Middle East, and North Africa. A McKinsey study and modeling scenario show that if women were to play an identical role in labor markets to that of men, as much as 26% could be added to global annual GDP by 2025. Last but not least, in addition to the devastating impact that violence against women has on those affected, in the EU alone, it's estimated that the economic impact of violence against women amounts to over 228 billion euros a year. Thirdly, gender equality is at the heart of achieving the SDGs. We will not be able to adequately address poverty, access to education, or climate change without addressing gender equality and the specific needs, challenges, and opportunities that women face. A truly sustainable future will be an inclusive future. And it's for these reasons that UN Women, which is the UN agency mandated to advance gender equality and women's empowerment, is working together with key market players to support the development of a credible gender lens investing market and increase the quality and volume of financing towards gender equality. UN Women is working to convene multiple market players, but also provide capacity building and technical support to market participants to develop financial products that support gender equality objectives, such as gender bonds. During this support, UN Women is working with the public and the private sector, including sovereigns, to do and conduct feasibility studies, identify credible use of proceeds, and also support the monitoring and the impact reporting on such bonds. We're very pleased to partner with the IFC and ICMA in developing and launching the gender bond guidelines, and that's what we will be discussing today. So that's a good segue to our next slide, which takes us into the role of the debt capital markets. So the debt capital markets really are the bloodline of the financial system. We've seen upward in 2021 of $20 trillion in annual issuances. And 5% of these issuances are aligned with green, social, and sustainability objectives. And this has been increasing exponentially over the years, which, as we will see actually in this graph. However, despite this exponential increase, less than 1% of these issuances are actually aligned with SDG 5. SDG 5 is the SDG that is aligned with gender equality and women's empowerment. And so we see a very small and fragmented gender bond market. And so when we were looking at this as UN Women, IFC, and ICMA, one of the main reasons behind the growth in the green bond market, for example, was the fact that there were standards put in place to assist issuers in identifying what makes up a credible investment. And so we worked together to develop and roll out these standards. But before I get into more of the details of the standards, let's actually just have a look at some terminology and make sure that we know what we're talking about when we use the phrase gender bonds. So gender bonds sit squarely under the social bond principles, and Valerie will talk a little bit more about this in her presentation from ICMA. Gender bonds essentially sit under the social bond principles, and they're debt instruments where the bond proceeds are directed towards pre-identified activities and programs that advance gender equality objectives. They can also be part of the sustainability-linked bonds in which key performance indicators are aligned with gender equality objectives. And we'll get into that now in the next slide. So I've mentioned there's the use of proceeds bonds, where budgets and expenditure is directly allocated towards eligible activities. This means that an issuer needs to identify these programs and budget expenditures prior to the issuance. And there's this ring fencing or exclusivity of use then that's applied to this particular issuance. The second option is on the sustainability linked bond. And this is where commitments are made to reach specific targets by specific dates. So the proceeds are not necessarily ring fenced for specific activities, but you're committing as an issuer to achieve certain objectives or certain outcomes. This means then that the bond proceeds can be used for general expenditure and not necessarily ring fenced, as I've just mentioned, but it does require you then to identify key performance indicators and specific targets then that you aim to meet as an issuer. And often the structure of the bond, the coupon, etc., will be then tied to whether or not you actually meet those objectives. And this is definitely what we're seeing with the private sector, that there's more and more issuances of these sustainability-linked bonds where commitments are made for specific targets. So let's have a look now at the guidelines that we've come up with for these gender bonds. So these are a first for such a type of thematic bond. And as I've mentioned before, this sits squarely underneath the social bond principles. And what's important about these is that these guidelines are not prescriptive, but rather descriptive. And so they give multiple examples and illustrative examples of what you as an issuer could identify as your use of proceeds. And I know Kathy will also talk a bit more about that from the private sector perspective. But I think one important thing to highlight here is that when we look at identifying use of proceeds, for example, we want to go beyond just identifying activities or programs that increase the number of women, for example, in positions of leadership. And of course, that's a good place to start, but there's so much more than just leadership, women in leadership. There's women in the supply chain. There is increasing your number of gender responsive enterprises that you leverage in your distribution channels, for example. There's also making sure that your goods and services that you offer as a company meet the needs of women and that are specifically designed with women in mind. There's also ensuring that the products and services you put out into the community are beneficial for all. And this includes addressing, for example, harmful stereotypes in your advertising. So you can see through these illustrative projects and examples that are provided that it really extends beyond just women in the workplace, although of course that's a really good place to start. And I'll mention at the end of this presentation a couple of frameworks that would be helpful for you as you think through this as a private sector entity or even as a public sector entity. The guidelines also provide useful framing in the framework development. So we speak to what is helpful when you're developing a framework to make sure, obviously, that this sits within a broader sustainability strategy. So in the case of a sovereign, for example, you would look at your national gender action plan and ensure that any bond issuance firmly and squarely sits within that gender national action plan. And there's more details on this in the guidelines themselves. I'm going to skip now to how can gender bonds advance gender equality? So one thing is obviously identifying specific use of proceeds or key performance indicators. But another critical component is that the gender bonds actually create these mechanisms for accountability and transparency, because your financing is linked to clearly identified programs and gender positive targets. So there's the need, first of all, to identify what you're going to be funding, but then also to be monitoring and tracking where that funding is going and what outcomes and results are actually being achieved by virtue of the fact that you're directing funding in this direction. So you can see how this creates this critical mechanism for accountability and transparency by linking the financing to programs or to important targets that you've set. Now, why issue a gender bond? And I think we'll hear more from Kathy on this as well. But really, it does demonstrate global leadership. There have not been a significant amount of gender bonds issued to date, and this is a way for an issuer to differentiate themselves in the market. No government has yet issued a sovereign gender bond, although, as I mentioned, UN Women is working with a number of issuers and a number of sovereigns to actually structure and create a gender bond framework. So this will obviously result in first issuer recognition, which is really important in a market that is growing, and there is so much demand for this diversification of investments. And that leads to the second point, which is around investor demand and diversification. So the number one question that is actually posed to public debt managers, according to a World Bank survey, is what public debt managers are doing or what their ESG strategy is. And this is now the number one question that they're getting asked. So there's this increasing demand from investors for ESG-centric investments. And of course, social bonds, sustainability bonds, green bonds are a way to meet that growing need. Thirdly, and this is very important, is the stability that issuing such a bond brings, particularly when you look on the public side. Buyers of thematic bonds tend to be buy and hold investors, and this results in less price volatility and more long-term relationships, as well as easier rollovers. It also facilitates long-term investments and can reduce maturity mismatch on the issuer's long-term time horizons and the investor's short-term investment interests. Issuers can issue long-term bonds while investors have the opportunity then to sell bonds at any time. This brings also additional budget security, particularly to line ministries. You can imagine if you're a line ministry and you're part of this bond issuance, you know for sure what your specific use of proceeds and your allocation will be with the year. And then there's limited risk that halfway through the year or towards the end of the year, someone will come and cut your budget. So that's a huge plus, particularly on the sovereign side or on the public side, brings you that stability to your line ministries. It also has the other benefit of increasing the coordination and engagement across ministries and government departments. Important to note, particularly on the sovereign side, is that any gender bond issuance would take place within an existing debt envelope. So we're not talking about increasing the debt envelope of the country, but really just ensuring that we take a thematic and apply a thematic lens to this particular issuance. Lastly, I just want to touch on sort of one particularly helpful framework when it comes to guiding your project and your KPI selection. And this is the Women's Empowerment Principles. Now, the Women's Empowerment Principles are essentially 7 principles that look at advancing gender equality in the workplace, in the marketplace, and in the community. And I touched on some of those examples earlier on, but what's also really helpful with the Women's Empowerment Principles is that it also comes together with a transparency and accountability framework, which provides a list of over 70 indicators, which can be very helpful as you think through the meaningful criteria for inclusion in a gender bond. So if there's anything that I think I would ask you to take away from this brief presentation now, is to go and have a look at those gender bond guidelines, to have a look at the illustrative examples that are included in those guidelines, and then also to pick up and have a look at the Women's Empowerment Principles, the 7 principles, and then also to have a look at the framework, which has these indicators. It's very easy to read, and you'll see the indicators listed out. And I think those will, again, be very helpful criteria as you think through what you could potentially include in a gender bond issuance. So thank you very much. And of course, if there's any other questions, happy to take those in the chat or by email. Thank you so much.
I'll now hand over to Samantha Swiss, Chief Executive, Kangan News, to lead the panel discussion. Samantha.
So before we kick off, I'll just hand over to the panelists to introduce themselves, starting with you, Jo.
Thank you, Sam. Can you hear me?
Yes.
Excellent. Hi, everyone. I'm Jo Dodd. I'm a partner a debt capital markets partner at King & Wood Mallesons here in Sydney. I've acted for a number of issuers of green, sustainable and social bonds over the last few years, as have many of my colleagues. So really looking forward to discussing issues associated with gender bonds tonight.
Great. Hi. Sorry, Dave.
No, you go, Nick. After you.
Thanks. I'm getting the alphabet confused already. Good afternoon to everyone. My name's Nick. I run the solutions business for Sustainalytics. We're owned by the Morningstar Group, and we're one of the largest providers of what we call second-party opinions globally to support issuances such as gender-themed bonds and loans. We do a lot of ESG ratings. So we support investors on ESG investing. We also support issuers around bonds and loans, and do a lot of work with corporates. So yeah, based in Singapore, and really pleased to be joining the discussion today. Thanks.
And following on, I'm David Jenkins. I lead the sustainable finance team at NAB, and have worked with our treasury team internally to bring the first NAB Australian social bond focused on gender equality back in 2017 into the market, and have worked with a number of other organisations exploring that, but increasingly work with governments, corporates and financial institution borrowers, as well as investors looking to either issue or invest in use of proceeds and sustainability linked instruments.
Thanks, David. I'm Marika Ward. I direct sustainable investing process across liquid markets for QIC, and I'm joining you to bring the investor perspective to the panel. Thanks.
Fabulous. Well, thanks everyone. We've got a good range of people to talk about these issues. So just to give everyone a quick overview, we're going to look at, we've heard quite a lot about, global gender issues, and also about the kinds of projects that can be financed through the capital markets. But I think it's worth us looking at that from a global and Australian perspective. Then we'll look at some of the projects the kinds of projects that could be financed by sustainable bonds, and then we'll start to look at the structures, and David can tell us about NAB's gender equality bond, and we'll get into a bit more detail about structure. So, Joe, I thought you might like to start off looking at some of the global gender equality issues.
Sure, thank you, Sam. So gender equality, I mean, as we can tell, as I'm sure we can all see, and we've heard from the earlier speakers, that gender inequality remains a massive issue globally, and sadly there has been slow progress over the last couple of decades. The gender gap has widened, and this has mainly been driven by a decline in progress in the largest countries. So according to the World Economic Forum, it's going to take 135 years to close the gender gap worldwide if we continue at the current pace. So that's a little bit depressing. The most severe inequality globally exists in relation to political empowerment and economic participation of women. On political empowerment, across 156 countries, which were surveyed by the World Economic Forum for its 2021 Global Gender Gap Report, women represent only 26.1% of some 35,500 parliamentary seats and just 22.6% of ministers worldwide. And in 81 of those countries, there has never been a woman head of state. There's also been very slow progress in closing the gender gap with respect to the economic participation and opportunity for women, which results from two opposing trends. While the proportion of women among skilled professionals continues to increase, as does progress towards wage equality, overall income disparities are still not bridged, and there is a persistent lack of women in leadership positions, as we know. So women represent just 27% of all manager positions globally. So these gender gaps, as was mentioned earlier, have widened even more through the pandemic. COVID-19 has resulted in new barriers for women because the sectors which have been hardest hit by lockdowns and rapid digitalisation are those where women are more frequently employed. Add the additional pressures of providing care to children and elders, which still predominantly sits with women, and the pandemic has stunted progress towards gender parity. On a positive note, there is one. Gender gaps in educational attainment and health and survival are nearly closed. So that is some good news. In educational attainment, 95% of the gender gap has been closed globally, although the last stretch towards parity is moving very slowly. So I thought you might be interested to know that the Nordic countries, again, probably not surprisingly, are the winners. Iceland is the most gender equal country in the world, followed by Finland, Norway, New Zealand, Sweden, Namibia, Rwanda, Lithuania, Ireland, and Switzerland. I've got to tell you, Australia is quite a long way down the list and nowhere near the top 10, but we'll come to that in a second. Sam, back to you, or do you want me to keep rocking on into?
Just thank you. I mean, we all know that there are big issues globally to be dealt with, but it really helps to have some statistics to make it so clear what we need to do in terms of financing for gender equality. So that's globally. You've already mentioned Australia is not performing so well in a global perspective, but as the panel is focusing on Australia, maybe you could continue, Joe, with some of the kinds of gender equality issues that are here in Australia, just to frame, give some context.
Will do. So as I foreshadowed, but perhaps surprisingly, I mean, it even was for me, given how developed we are as a nation, gender inequality remains a huge challenge here. And as I mentioned before, Australia is a long way down the global rankings when it comes to gender equality. We rank at number 58 out of 156 countries in that World Economic Forum index, which was as at March last year. So this means there are many other countries which are significantly more advanced than Australia on issues such as economic participation, educational attainment, and health and survival, which is despite us being an advanced and developed nation. And interestingly, when the first index was published by the World Economic Forum in 2006, Australia was ranked number 15. So we've dropped a lot. I did find a little bit of a disparity between these stats and what was in the government's budget, by the way. So I you know, who knows what is right. But anyway, on economic participation and opportunity, we rank 70th compared to 12th in 2006. And as Sam said, there's clearly a lot of work to be done here that needs to be funded. The key gender inequality issues in Australia are domestic and family violence, and the gender pay gap and women in leadership. So there really are a lot of sobering statistics on domestic and family violence in Australia. This is based on Human Rights Commission reporting. So for example, 1 woman is killed every 9 days by a current or former intimate partner, and 1 in 5 women have experienced emotional abuse by a current or former partner. Domestic violence remains a critical and endemic issue in Australia and costs the economy $22 billion a year. So the Australian government is certainly focused on this and launched the 4th action plan of the National Plan to Reduce Violence Against Women and Their Children in March 2019. And I saw in the budget that they are focused on the next, I guess, the 5th action plan. Under that 4th action plan, they committed $328 million for prevention and frontline services. But despite this, the Human Rights Commission says that crisis and support services are still under-resourced, particularly in rural and remote areas of Australia. And as I say, the next action plan is due later this year, I believe. And in the budget, the government recognised that rates of violence against women remain unacceptably high. So on gender pay gap and women in leadership, while there have been positive developments, including the enactment of the Workplace Gender Equality Act in 2012, Australia ranks 68th on the Gender Gap Index on pay equity for similar work, and 46th in relation to senior positions, so legislators, senior officials, and managers. The Workplace Gender Equality Agency of Australia, which you'll probably hear a little bit about during the course of our conversation, published Australia's Gender Equality Scorecard in February this year. The WGA, or I think WGEA, maybe people shorten it to, that data covers over 4 million employees across Australia, so about 40% of Australia's labour force. The data shows some interesting facts. So the gender pay gap stands at 22.8%. Women still earn nearly $26,000 less on average than men. Although I noticed in the budget announcement that the government said the gender pay gap is 13.8%. So not sure what's going on there. Women make up over 50% of the workforce. I mean, this gets boring hearing this stat, but I'm just going to say it again. So women make up over 50% of the workforce, but less than 20% of CEOs. They account for less than 1 in 5 CEOs or board chairs, 1 in 3 board members. Men are twice as likely to be highly paid than women, meaning that men are twice as likely to be in the top earnings quartile. Over 85% of Australian employers still pay men more than women on average, and the majority of boards are still dominated by men. So I'm sorry to share all of that, but I feel that it's important to have as you say, Sam, some of those stats at the front of mind as we sort of start talking about what are some of the things we might be able to do to make a difference.
Yeah, thanks, Jo. Obviously, very, very sobering stats and a lot to be done. And, you know, before we go in and look at sort of sustainable bonds, I was quite keen to address this issue of, so if we look at sort of climate finance, the capital markets were way ahead of the government in terms of pushing for change and the transition that needs to happen here in Australia. Do you think, and this is a question for all of you on the panel, you know, do you think it might be the same in with social finance and then more specifically related to gender? So are the capital markets more likely to start things happening? I mean, we'll get onto it because there have been very few gender bonds, but in general, what do you think?
Yeah, I mean, I would, God, I would hope so. I did jot down one of, I think it was Robin, who was the last speaker, when she said that the debt capital markets are the bloodline of the financial system. I thought I liked that. And so given the debt capital markets are the bloodline, I mean, I feel that it's a real opportunity.
Yeah. Anyone else have got a view there, or?
Absolutely. I think you've seen the. Okay, DJ.
No, I'll go after you, Marijke.
I think you've seen the markets ahead of policy in quite a few areas. So, you know, there's no reason why the markets can't be ahead here as well.
Mm.
Yeah, I mean, and I was going to add to that. I think so the actual public bond market will probably be the second. They won't be the leading edge, I'd suggest. We're seeing opportunities in the loan space initially, and we'll get into this in more detail because part of that challenge is around finding scale for eligible projects and expenditure, and that's not easily done in the corporate sense. Clearly, it's a bit different with a development bank, and that's probably one of the key reasons that we've had challenges getting other corporates coming into the market with dedicated gender social bonds.
Okay.
The only thing I would add to that is, yeah, I totally agree with those comments, and I think that the label bond market and thematic bonds are a really good way for corporates to show that leadership and to push and to drive their governments. An interesting anecdote, the day that the US government pulled out of the Paris Agreement, Apple issued a green bond. So I know it's a different issue, but corporates do have some pretty powerful messaging that they can make and be a bit more innovative, and even more so in the loan markets.
Yeah. Okay, so well, I'll just give a couple of statistics about bond market issuance here in Australia if we move onto the product, and it very much reflects what we've already heard from the other speakers today. So according to Kangaroos data, and I know everybody may have slightly different ways of how they classify bonds, but according to the way we do, in total, you know, just over half of the green, social, sustainability and sustainability linked bond issuance, 53% has been green with a green focus. And we've got 30% with sustainability, which is, as we heard, a mixture of green and other social issues. And then just 17% on social. So you can already see, I mean, we all know that with the pandemic in the last 2 years, that really increased globally the amount of social bond issuance. So that's been a good development. But within that social bond issuance, there have only been 3 bonds that have had a specific gender focus. So started with NAB's Gender Equality Bond in 2017. Marijke reminded me, thanks Marijke, I checked this. IFC then did a social bond with a theme to support women entrepreneurs and financial inclusion. And then just last year we had the Asian Development Bank doing a gender themed bond. So just 3% of total issuance has got this specific gender lens. So maybe we should start and look at NAB's bond. It was 2017, the market has evolved, but there might be some, well, I'm sure there are some interesting things to sort of discuss there and then lead on to further discussion about the kinds of instruments that could finance gender equality. issues. So David, maybe do you want to start and talk us through the structure and the kinds of challenges that were involved in getting that bond to market?
Okay. I guess, and I might just start by saying I'm merely one of a team that worked on that. I take, just because I'm here speaking about it, doesn't make me the one that is behind all the work. So a lot of people contributed to this. And a few people have since moved on, but Steve Lambert, that many of you might know, Eva Zaleli, who was the group head of group funding at the time, and our team, we worked very closely, and with Sasha Corwell and the diversity inclusion people team at the time. So the way it worked was we had originally been a green bond issuer and saw an opportunity to build on what we'd done in the green bond issuance process by addressing some of the societal issues that we as a bank and more broadly as a community were looking to address. For us, gender equality was a clear one. It was an imperative for the bank. And at that point, and this goes back to 2016, there was a rising undercurrent around gender diversity is clearly better for business. Now, everyone gets that without being blatantly altruistic. It just makes good sense to do it. In the same way, being sustainable in the way you go about doing your business makes perfectly good sense. It was clearly a priority for the bank. We were looking to find an opportunity to catalyse investment and also to create some way to bring issuance into the market that might incentivise more to follow. Now, we had the benefit of the ICMA social bond principles coming out in 2016. That then put some meat on the bone, as Nick would probably recall, because at that stage, it had been quite challenging to think how we could justify anything with a social outcome without, a self-labeled transaction doesn't make sense. So we were able to use the social bond principles, the 4 pillars, but specifically the categories that are being developed. And within the paper that we were talking about earlier, it was around this socioeconomic empowerment. So clearly addressing gender equality was working to address social empowerment. And we tested the idea, first of all, looking at specific projects. So were we investing capital into specific gender equality driven projects? And the scale was small, to be perfectly honest. On the bank's balance sheet, it wasn't huge. The other idea was, how do we, if we do find something, how do we demonstrate that it is actually making an impact, and on what basis are we going to do that? Now, we needed to find out what was credible and independently verifiable. And then in talking with our teams internally, it's the relevance of WGEA and the reporting that was required under WGEA gave you a clear baseline where people were and who wasn't improving over time. We then looked at examples of, in the green bond space, there was work around identifying low emitting sectors or best in class sectors. So if you consider the green building space, and again, this is just the step we went through. For us, it was identifying lenders or borrowers that were perceived to be best in class as it came to addressing gender equality, and would they be willing to be disclosed with a view to encouraging others to emulate, and on what basis we were able to demonstrate that. So each of the names that we identified, at that stage it was 14 large corporates who were eligible to receive the WGEA Employee of Choice for Gender Equality citation, which I understand is a top tiering whereby they not only meet the requirements under the Act, but they go above and beyond. And there's a specific set of criteria that WGEA applies annually, which is increased incrementally year on year. So in order to hold that, first of all, they need to meet that criteria, but then continue to improve over time. So those criteria themselves, as Joe mentioned earlier, cover areas like leadership strategy and accountability, a gender balanced workforce, gender pay equity, support for caring, mainstreaming of flexible work, preventing gender-based harassment and discrimination, sexual harassment and bullying, and driving change beyond your workplace. So clearly very well measured, considered, and under the Act, employers with more than 100 people, I understand, are required to disclose that. So that gave us a starting point. Interestingly enough, the top performers were in the services sector predominantly. Consulting firms, multidisciplinary firms, legal firms. universities and property companies, and banks were actually also quite highly rated. Now, we took a step back rather than simply financing banks. I mean, we finance the economy. We wanted it to be representative of the economy. And that initial pool were all companies that were willing to be named and disclosed. We had, interestingly, a couple of names that didn't want to be disclosed. They suspected something sinister. But with the benefit of time, it proves that it wasn't the case at all. The challenge we've had is being able to demonstrate the measurable additionality over time. Now, we've reported year on year, and we undertake to disclose who remains eligible for the index or the citation, what the percentage of women they have on boards, which is one of the criteria they disclose under WGEA, the split of their workforce. And I think the three metrics we've tracked on our side has been female participation in the workforce of that entity, managerial positions, and board level. So we track that year on year. We disclose that for the companies. But we've struggled to find opportunities to replicate that elsewhere. And we've certainly talked to corporates, talked to governments, talked to international issuers and borrowers. And we do have the benefit of the WGEA and the Act in Australia, which requires people to disclose that. Not many others do. So that's probably how we've arrived at where we have.
So arrived in terms of not having refinanced that particular bond, but looking at other areas?
In terms of not had many repeat issuance, most people that have gone down the path, to your point, have earmarked expenditure for causes that are allocated towards improving gender equality, whether it be in the workforce, access to finance, and things of that nature, through other investment categories. So in social bonds, it may fall under access to essential services or socioeconomic empowerment or some of the others. And we've seen that with government issuers, but the sums of money to date haven't been discrete and large, so on their own don't warrant a standalone bond issuance. And I know that I touched on loans, and we're certainly seeing the emergence of sustainability linked instruments that focus very heavily on improvement in gender equality.
Yeah, and I think we'll get onto that, because I think, credit to NAB for actually having been able to find something to measure and report against, right? And then also being able to identify the projects. This is obviously hard, and has led to the lack of gender specific use of proceeds bonds. But Marika, maybe we can just tap over to you for the investor perspective. I mean, as a woman, I'm sure you're all for anything you can do to promote more gender equality. But as an investor, what are you hearing from your clients, and why do you think there hasn't been more gender focused issuance?
Oh, thanks, Sam. I think, we've certainly seen some really interesting, admirable opportunities to finance gender equality improvements in Aussie dollar bonds. When we look at the deals, there's some like NAB's gender bond that really were rewarding existing strong practices. So when we were assessing that deal, it seemed like a really low risk opportunity for portfolios. And then some of the others are sort of really looking to incentivize change. Certainly, we've not heard any negative feedback from clients when we've reported on those sorts of bonds in portfolios. But what we're really seeing is an absolutely exponential client inquiry growth around climate analysis of portfolios and portfolio decarbonisation. And you've heard from DJ and some of the earlier speakers about the difficulties in sort of getting program sizes that are suitable for a public market gender bond, and about sort of measuring portfolio level impacts and being able to show improvements over time, which is sort of something that, a lot of investors are wanting to see in portfolios. So, one of the areas I think is probably an opportunity in the gender equality financing space is through those sustainability labeled deals. So something that's got the option for the issuer of having some green and some social rather than a pure social bond. And I think the other thing that investors, I do wonder if some investors view that sort of social bond space or gender improvement projects as being really sort of more in the domain of government, or a social bond being some form of charity perhaps, and that might be why they sort of struggle to see how they can make a tangible impact through the financing. So, I sort of wonder if sustainability labelled bonds are a better opportunity than, a pure social gender bond.
And certainly to that point, Mareike, I could talk from experience on some of the roadshows with our social bond meeting with investors. We had marked differences domestically versus globally. In Europe, surprisingly, I thought they would be far more receptive. It's fair to say that there was much more support locally. In mainland Europe, it was nowhere near as positive. Again, to that point, shouldn't the government be doing that? Isn't that what governments are meant to fund? And for them, they needed to see specific intentionality and additionality. So it was very challenging in a corporate world to demonstrate that. It's a little different when you're doing a green bond. You can point to scalable investments and projects, but the opportunity, and I know that we talked to a Canadian bank that went down this path. They had a similar route, and we actually talked to banks elsewhere in Europe who were looking at, and nothing came to fruition.
Yeah. Okay. So, I mean, maybe we can pass over to you, Nick. I mean, so obviously measurement is a huge topic in the sustainable bond world, but when we look at gender, I think it's even more tricky. So what are you seeing, just not necessarily just about Australia on a global basis, have you got some insights into some of the gender focused deals and how we can measure progress through those funds?
It's a great question, and I think a thematic that underpins, or a cornerstone that underpins all of the labelled markets, is really disclosure and transparency. So the issues we're talking about today, and reporting on them, being transparent about them, disclosing more and more about them, having more frameworks to reference to, I think are incredibly important in terms of developing and helping the market evolve. I do agree with all the other comments that have been made by the other panelists, especially what David was talking about in terms of scope and size, and that can sometimes limit some social issues in terms of getting a standalone place in these markets, because they're often integrated to other issues, or there's not the size of the asset or program in many cases. A couple of examples just to mention, and maybe these can be applied by certain corporates in the Australian market, would be, so we as Sustainalytics work with all sorts of issuers, globally, as you mentioned, not just Australia, fortunately Australia as well. We worked recently with a company called B3, and I'm not going to even try to say their name in Spanish, which is, sorry, it's Portuguese, I should say, which is the Brazilian, the Brazilian Stock Exchange. And one of their KPIs, so we know that there's the use of proceeds part of the market, we know that there's the linked part of the market, was actually connected to developing a diversity and gender-based index, which is a little bit indirect, but incredibly important for their market. So the context around some of those things and what makes a good KPI and ambition is really important. So we're seeing some different things, apart from just management leadership representation and equality metrics around that. We're also seeing some other types of things that corporates can drive as well. So that's one example, just to show the different ways that can be tackled. Some of these issues. The other one was actually going back a few years, we worked with Etihad, the airline in the Middle East. And the interesting aspect of that is they had 6, 7 or 8 use of proceeds categories. And one of them was a specific dedicated program to encourage much more women pilots, because I think they needed more pilots and wanted much more diversity in there for all the reasons that we've talked about already. So I think it's just the start. It's a difficult issue just to be standalone, given some of the size constraints. If you talk about use of proceeds, I guess what we're seeing is probably a lot are in the microfinance space, the women-led entrepreneur space, and some of that is connected to a lot of things in developing markets. So I think we'll continue to see those sorts of things, even supporting some level of supply chain purchasing from women-led businesses. There's all sorts of ways that's coming and manifesting in what we call the use of proceeds part of the market. The other thing is that an emerging thematic is, the E and the S and the G are becoming much more interrelated. So over time, some of the points that Marika mentioned about green and about transition and decarbonisation, more and more that's becoming about people issues. And in some of these markets, women have been disproportionately impacted by things like COVID, natural disasters, even in the presentations that we've seen. So the just transition, the human element of some of these climate change directly filters back into some of these gender points as well. The last point I'll say, I'll make sure I don't talk too long, although I'd like to, is really on the link side of things. And we're seeing more and more different types of KPIs come to market. So it's great that there's frameworks such as 2X, such as the work IFC's done, such as the set of metrics that ICMA has. Great references, makes our job a bit easier actually, which is great, and things we can leverage. But a lot of that work, we really want to make sure when we're looking at KPIs that they're not just impacting one or two people. These KPIs, particularly on thematic issues such as gender, have to reach multiple levels and spread throughout an organisation. So applicability has to be considered, and it's different when you look at social issues versus environmental. Is a bit more formulaic. On the social side, these things should be considered and have to be considered, and we spend a lot of time with issuers talking about, does this impact two people on your board? That's great, that's a good start. What about other levels of management? What's the definition? How is that going to drive a change across an organisation, not just on a tiny, tiny piece? So we expect to see more, both use of proceeds and linked, and some of the linked aspects are becoming a bit more funky over time, which is really good to see, because the more different models we have, the more the different types of KPIs we have to support various aspects of this, the better.
Yeah. Okay. No, that's really interesting, Nick. Thanks. And I think, as both you and Marika have mentioned, probably we shouldn't be looking for gender-specific bonds. We should be looking at these sustainability bonds or social bonds, with wider social issues plus gender. And of course, just to clarify for anyone listening, those are what we're calling the labeled use of proceed bonds. And then you also touched on the sustainability linked product, Nick. So there's only actually been 4 sustainability linked bonds issued in Australia, all done last year. As far as I know, and please correct me if I'm wrong, DJ or anyone else, none of them did they have social elements to them? They certainly didn't have gender. They were all green focused, right? So that's a new and evolving. David, sorry, you were on mute. I didn't hear that.
Sorry, I was just going to say each of them focused heavily on environmental KPIs. 3 of them had a single, 1 of them had 2. But again, that's a nuance of the sustainability-linked bond market at the moment. The reluctance of investors, and a challenging element to this, and Marika's no doubt got a view, to price and effectively value a bond with multiple sustainability-linked KPIs. How do you value that option? How do you price it in at the outset at any point in time, but also identifying what is most material to both incentivize or penalize issuers to go down that route.
So challenges again in terms of the KPIs and SPTs that are involved in those linked products. But Marika, it would be good to hear from you in terms of, overall, if you had a choice between a labeled green, social or sustainability bond or sustainability linked bond, what would you go for and why?
I think you know the answer to that, Sam. From what issuers tell us, the labelled bonds, like the green bonds, are appreciated by their employees, but then they tell us that sort of real cultural buy-in and the excitement comes from the sustainability linked deals. And certainly for us, with the ones that DJ's mentioned already, they're an excellent tool for being able to see a pathway to decarbonising our portfolios. But with the sustainability linked ones, I think too, a broader range of employees in an organisation feel like they can contribute to the outcomes, and they can also see that their organisation is setting improvement targets. And I think, for us, thinking about the panel today and thinking about gender, gender equality, and it goes back to some of the data that Joe sort of blew us away with earlier, but encouraging gender equality is still an engagement topic for us domestically when we're talking to issuers. You've still got Australian boards, especially in the unlisted space, where they're well below the AICD gender target. We're still having conversations with management about not being able to find females with sector-specific experience for their boards, and that totally blows me away. But then, you hear the data that Joe went through, and that's the reason why. When we think about sustainability-linked financing, though, what we do say to issuers is that the main targets in the structure need to address the organisation's key ESG risk. But you can have multiple KPIs. So, we're very open to seeing more than one target attached to a deal. Something DJ sort of alluded to is around, incentivisation too. And I think a lot of debt investors will say that, they're not able to incentivise through a coupon adjustment on a deal. But you're going into deals well through the issuer's curve, so you're already giving the incentive there. I think, if an issuer comes to us and they're one of the biggest emitters in the country, don't bring us a deal that doesn't have any decarbonisation target in it. But then you can set another target around things like pay equity or recruitment or training, some of the issues that Valerie and Robin and Kathy outlined earlier. I think, at the end of the day, you do have to wonder about what an organisation is missing out on if they don't have a staffing structure already that sort of reflects broader society, really.
Yeah.
And that sort of feeds into our views on corporates.
Yeah, I think your comment about engagement, particularly, everything was interesting, but in terms of engagement, we've been focused here on the products and what kinds of, structures we can do. But of course, there's a lot more than investors can do and are doing, like on the engagement side to try and get companies to think about gender equality issues. So it's good to hear you say so, Marika.
Start with looking at your own shop as well, what you're doing at your own organisation.
Yeah. And David, would you say, just looking at the sort of choice between a labelled bond and a sustainability linked bond, what are you seeing from the conversations that you're having right now? Are you, like I say, there's only been 4 SLBs, but lots of people think that's a much more relevant product for a high emissions economy like Australia. So what are you hearing and what do you think we're going to see?
Well, certainly lots of interest. I think people are looking at putting the foundations in place. So you need to walk before you can run. And as Nick would know quite well, it's in many cases, there is work to be done. Marika said this, you need to get your own shop in order. And that extends to measuring, having baseline information, having a clearly articulated strategy and support from the board to move forward with that, because sustainability linked instruments, it's integral to have a coherent strategy that's aligned with what you're doing with the bond. You simply can't create a sustainability linked instrument over here because it's flavour of the month. It needs to be consistent and genuine, but it also then needs to align with the most material ESG issues that the business faces. So at the moment, there is so much rising focus on corporates, listed entities. It is top of mind for everyone, but you then have the additional layer of not only are they focused on disclosure reporting, improving their sustainability profile and their ESG risk over the long term, they've also got the spectre of misrepresentation, greenwashing, director liability if they get it wrong. So people are treading very carefully, ensuring that what they do is credible. The ability to deliver on the promise proves that they can actually meet the claims and work towards it. They have a basis for a sustainability-linked target. They are able to measure and annually track performance against KPIs. Are those KPIs actually material to what they do, or are they simply, well, it's a bit token? We need to ensure that the most material ones are included, but certainly there is opportunity to expand that. And in loan space, we're seeing that quite definitely happen. The next step will be the bond space, but the bond market is taking a little longer to mature, to get comfortable with multi KPI sustainability linked bonds. It will come, and we've certainly tried to take some to market in offshore spaces, and it's been met quite convincingly with investor feedback saying, no, not ready for that yet. Two, I think we've seen 3 KPIs in a sustainability linked bond instrument so far, nothing more than that. Loans can quite often have 2, 3, 4, 5. And in fact, ESG linked derivatives, we've done one with 8 specific KPIs that cover all their material ESG risks.
Yeah. Well,
maybe, sorry, Sab, I might add a couple of things around that too. So yeah, absolutely agree with those points. And I think it's part of a broader dynamic we see in this market, and there should be in decarbonisation extremely important, but beyond carbon, sometimes maybe the blinkers are on a little bit too heavily on carbon. There's biodiversity, there's lots of other extremely important issues, and it can be hard to distill all those into one metric for a company. You use the proceeds, you've got a window into a company for a specific pot of money. The link side is a broader kind of strategy. But I think at least from ourselves as a reviewer, we're getting involved in a lot more conversations about how do we represent the S dimension of our business, whether that's gender, whether that's race, whether that's other forms of inequality, which is great to see at a corporate level and pushing that leadership, because often governments operate different speeds. So I think we will definitely see more, and maybe the bond market will copy a little bit more from the loan market. And it's even so. I sit in Singapore, and even the Singapore market, I know this is focused on Australia, but just today released a white paper on a roadmap to drive more gender equality in the workforce. Even more perceived, advanced, developed economies, these S issues, particularly gender, are becoming increasingly. There's more awareness needed, and at the end of the day, I think the market needs to continue to challenge, investigate how we generate more and more impact. So whether it's use of proceeds, there's impact. Whether it's linked, there's impact. And the best way to construct and drive that change, and the outcome is the impact and the cultural change we want. That's the challenge, and the best way to do that, will continue to evolve.
Yeah. Thanks, Nick. I mean, we're definitely, in an evolving market, and it's with all the things that we need to do to finance, climate risk and gender issues and everything. And sometimes, we might forget how much progress has already been made. And I think, it's important to acknowledge that. We could carry on talking all evening, but I'm sure that you've got other things to do. I'm just trying to pull our timing back to match the agenda we had. So I think unless anybody has anything else they want to add, we might hand back to Mushtaq.
Thank you very much, Samantha. And thank you very much to the panelists as well. Great discussion. So now we'll hand it over to Ms. Thuy Van Nguyen from Clearstream Banking, Hong Kong, who's the APAC representative for ICMA Women's Network, for closing remarks.
Thank you very much to the speaker for this really interesting discussion. It is encouraging to see that the capital markets have started looking at gender issues, and a certain momentum is seen in several countries across the APAC region. In this context, allow me to talk about the ICMA Women's Network. My name is Van. I'm the APAC representative of the ICMA Women's Network, working for Clearstream Global Markets. So the ICMA Women's Network is a global and open forum to support and encourage women at all stages of their career and to further the gender equality within the debt capital markets. We are organized via a structure of regional committees in 12 countries globally, and each committee is spearheaded by a representative for the APAC region. That would be myself. What we do is we deliver practical workshops focused on skills development. We host discussion on relevant topics with industry stakeholders, and we organize events, networking events, which is at the core of the offering. So the ICMA Women's Network is open to all ICMA member firms and their employees. So everyone is welcome to join us. And if you would like to get involved, please reach out to ICMA directly or to myself. The details will be sent around by email later on. And if you would like to receive information about upcoming events, please sign up on our mailing list on the website or follow our LinkedIn page. Thanks a lot for listening, and I look forward to hearing from you.